See what happens. All right, let's see, I'm going live now. So, all right, guys, good afternoon, everybody. Today is Monday, January 2nd. It's 2:03 right now. Our scheduled mentoring session is for 2 o'clock. So I'm gonna go ahead and set this up real quick and we'll get started shortly. All right, let me get this link sent out to you guys in the premium. I'm gonna get started. Seeing as people make their way in. All right, cool. Get a few more moments for people to make their way in. So let's see who's here so far. Hey, Fernando, how's it going? Natasha, happy New Year's, guys. Just gonna wait for people to finish making their way in and then we'll get started with this. I got Will over here too. All right, cool. Looks like Will, Marco made it in the room. Hey, Will, Marco, happy New Year's. I don't have the screens on here. Update this real quick. We got Eunice over here just joining the room. Happy New Year's, Eunice. Got Alex here just joining the room. Happy New Year's, Alex. All right, guys. So I'll give it a few more moments for people to make their way into the room. For this mentoring session, we don't have any questions set up. So, I mean, we'll go over whatever questions you guys have. I think the main things I'd like to cover probably be the breakout 2.0 and the momentum scalp that we typically apply so that we can have some understanding as what we're going to be focusing on for the coming week. All right, looks like Maria and Emil just joined the room, so happy New Year to you guys as well. Get a few more moments, guys. I wasn't expecting too many people to join in on this mentoring session since this is pretty much everyone's day off still. But I definitely want to get you guys ready and set for the upcoming trading week. The thing that you guys want to keep in mind is that this is the first trading week of the year, and also it is NFP, so expect a lot of weird movements. I know I've been telling you guys that for a while now, but that's just how the market's going to be. I mean, on Mondays and also on NFP, plus obviously first week of the trading year. So if you guys have any questions, feel free to put them in the chat. Otherwise, our main focus today will be covering and reviewing the breakout 2.0 and the momentum scalp strategy that we've been applying. For this whole year, that's pretty much all my focus is going to be, guys, for the live sessions. It's going to be looking at the breakout 2.0 pre-market and then looking to take that on open. And then we'll be looking for some momentum scalps and momentum scalp variations throughout the live sessions. So keeping it straight and simple, avoid any confusion. I think those strategies probably have the highest probability of winning. So I think that's what we should probably focus on. But yeah, if you guys have any questions, feel free to put them in the chat. Otherwise, we'll get started shortly as people continue to join in. Fernando's asking, is the daily entry no longer effective? No, it's effective. It's just we're not on the live session long enough to follow the daily entry. Fernando, because I get off at 8, so like the daily entry could come between open and 9:30, right? So if it comes up after 8, I mean, you guys can still take it, but I'm probably not going to be there to take it because I'm not on the live anymore. I typically stop trading at 8 o'clock, so that's the main reason why I'm not applying it. I mean, the breakout 2.0 is probably going to be easier to take because you can analyze prior to market open, and it's pretty much the same movement as the daily. It's just I don't want to wait on for the daily to come. So still works. It's just not necessarily one that I'm looking for. Maria said that she can't see my screen. Is anyone else having issues seeing my screen, guys? Just want to make sure and confirm it's just Maria. So you get Natasha? I think Natasha said she's all right. Okay, Will said it's fine. Maria, I think it just might be yours, Maria. So you might want to maybe get off the Zoom and then come back on. That'll probably fix it. It seems like it's okay with everyone else. Yeah, you can probably just exit Maria and then come right back in, and I'll probably fix it for you. All right, so looks like majority of you guys are here. I don't have any specific questions, guys. So if you have any specific questions, just go ahead and put them in the chat. Otherwise, I'll be covering and reviewing the breakout 2.0 plus the momentum scalp variation, because those are the main strategies we're gonna be applying during these live sessions for the coming year. So, all right, let me just go over. So we'll start off with the breakout 2.0. I don't think we've had any entries. Do we have any entries, Maddie, this past week?
No.
Yeah, I don't think so, right? Yeah, because I don't remember taking any this past week. I think we did have some the week before though, so I'll probably just cover those. Yeah, thanks, Natasha. Thanks for confirming. Yeah, I didn't think so either. Maria said, Happy New Year's to all. I have doubts about the momentum scalp variation strategy about the pivots in which the price must close above, up, and down. What pivots are they? Can you give an example in a graph where the pivots are separated? So there's no requirement for the pivots to be separated or close, Maria. I think you might be confusing yourself on that one because for that specific requirement, I'll go over that strategy first so that you can understand. But I think you're just confused with the actual strategy because there's no requirement for it to be in a certain place. They just need to be a retracement and continuation back in the direction of price. So let me just go back to so let's go back to Friday over here because I think there were some entries that happened on Friday.
We had a breakdown on Thursday.
Did we? It was a was it a
Oh,
no trend? Okay. Yeah, that's what I thought too. Because I remember we saw when I marked it up, but we didn't actually. Well, I didn't take it myself. So that makes sense. Yeah, Maddie's here, guys, in the background. If you guys were just wondering, because I'm talking to Maddie here in person. All right, so let's go over here to this one right here. So this came up at 7:02. This is the one that we took on Friday. I'm going to go over this step by step so that you guys can see and to clear up any confusion. It's fine if you guys get confused with these strategies because we haven't necessarily covered them completely yet. The variation is still fairly new. It's still I could see why it's a little confusing for some people because I haven't really covered it super in detail. So Maria, I'm going to do this for you right here. All right, so the first thing that we need when we're taking this momentum scalp variation is we need to confirm the direction of trend, right? So let me go over here and I'll just put this over here real quick. See if I can minimize this a little bit. I'm on my laptop, guys, so the screen's a little smaller. You know, what I'll do here is I'll go ahead and I'll keep it big, and then I'm going to go in and look at it step by step. So first, you want to confirm the overall trend. Let me just maximize this. So first step, you want to confirm the overall trend on the 1 minute, 5 minute, and 10-minute time frames, right? So looking over here on the 1 minute, you can see that the 1 minute is bearish. And the reason for that is because price is below the pivots, trend meter is red, pivots are angling down. This is going to confirm a downtrend on the 1 minute. Going over here to the 5 minute, you want to look for the same thing. You want to see price is below the pivots, trend meter is red, pivots are angling down. You don't need all three, but you just need to confirm that you have, you know, some sort of confirmation that price is trending down. So here on the 5 minute, you can see price is below the pivots, trend meter is red, and pivots are angling down. You can have it where price is below the pivots are angling down, and the trend meter is blue because, you know, price can be shifting, or you can have it where the trend meter is red, price is like in between the pivots here, but they're still angling down. So you don't need all of them, but majority of them will help you with your analysis. So the more the better, of course. So we have the 1 minute, 5 minute, and then lastly here on the 10 minute, you're looking for the same thing. You can see here that price is below the pivots, trend meter is red, and the pivots are angling down. This is going to confirm that it's in a strong downtrend on all three required timeframes. So with that said, we have step one of this requirement met. Once we have step one met, you can move on to step two. For step two, you want to confirm a retracement momentum signal on the 1 minute, right? So you can see here that price drop below, and you can see that this green candle right here has a green buy signal, right? Price is trending down. So when you have a momentum signal in the opposite direction of the trend, this is going to confirm that price is just retracing. It doesn't mean that price is going to reverse. It just means that price is currently retracing. So looking over here at this green sell signal or green buy signal right here, this is only going to confirm that this is a retracement, right? So we confirm step one, everything's in a bearish downtrend. Step two, you want to confirm that there's a retracement momentum signal on the 1 minute, which is right here. Once you confirm step two, you move on to step three. Step three, confirm price closes past, confirm that price closes past the pivots and retracement on the 1 minute. So I think this is where your confusion is arising from, Maria, because you're not sure which pivot it has to cross, right? It has to cross any pivot. So you can see that price is below. Yeah, there's no pivot, just past pivots in general. Do you get what I'm saying, Maria? So there's no specific pivot as the pass. I mean, the first pivot would be well enough. It doesn't have to pass all of them. It just says close past pivots and retracement. So price comes below, retraces up, and you can see right here that price closes past right here, and it continues up higher, and then it closes past here again. So there's no specific pivot. It just needs to retrace. So you're looking for price to retrace past the pivots, right? Does that make sense, Maria? I want to make sure that you get this before we move forward, because I think this is where your main confusion is. Yeah, so there's no specific pivot. I mean, you can just count the first pivot if you want. If you really want a specific number, just count the first pivot, which is going to be the green one, right? Level one. But realistically, you're just looking for a retracement. There's no hardline requirement for this specifically. You're just looking for this to retrace up, and the retracement is going to confirm that step three. So again, step three, confirm price closes past pivots and retracement. So you just want to make sure that it's retracing. The retracement is here, right? You can see price comes below. This is the direction of trend. And when price comes up right here, you can see that this is a retracement. Because price comes down, retraces, closes above any of the pivots. Because this can close right here and then come right back down. And that could already be it, right? That could be, I think there was an entry right here. I can't remember if there was one here, but I don't remember taking this one. Actually, there was one right here. So let me just go back real quick to this one here. We already knew the trend was bearish. There's actually another entry right here. And I think that's one that we actually took. Okay, so this is going to be a little easier, Maria, because you're not so far off, right? So like right here, we have the overall trend is bearish. Step 2, you want to confirm the retracement momentum signal, which is this buy signal right here. Step 3, you want to confirm that price closes past the pivots. It could be any pivot, whether it be pivot 1, 2, 3, or 4. You just want to see that price closes past it. So this is a better example because you can see price closes above it. And then it comes back down, right? So this is going to be step 3, price closes past the pivots. And then step 4, you're just looking for this motion. You're looking for price to retrace up, close, and then come back below and then close again, right? So that's going to be step 3, price retraces. Step 4 is that price corrects back down. So we have step 3 here, price pushes up, closes. And then again, this next candle right here closes right back below it. And that's where you confirm step 4. Confirm price closes past pivots in correction of the overall trend. Since the trend is bearish, you want to make sure that price closes right back below the pivots. Doesn't matter which pivot, it just needs to be below all the pivots. So with that said, this right here is going to be the actual entry. Step 5, enter on the close of the candle. Same TP stop loss, 100, 300. Once you have that set up right there, you let the trade run. And then go straight to TP, right? This is the one that we took actually on Friday, I believe. Let me see where my profits are over here. So yeah, this is the one that we actually took. Momentum scalp variation right here. And you can see that trade that we took right there. That's the profit that I made over here. Made about 1,200 on that one. Pretty much all across all my accounts. That's the same exact one we took right there. I think I skipped the second one though. So this one right here was the entry. And I think there was another one that came up right after it because price ended up retracing up even further. So here's another setup right here, Maria. So see how price kind of came below? That was one entry. And then price came back above right here, right? This is another setup right here because price closes above retracement. Everything's already met. First step, overall trend bearish. Second step, retracement, momentum signal. That already happened right here. Third step, price close past pivots and retracement. Again, right here, price retraces up. And then step 4, you're just waiting for price to come right back below. So again, right here, price retraces even further. Comes down right there, but it doesn't close below the pivots. Again, right there. Okay, now this is the actual entry. Price right here closed below the pivots. And then right there, this is another entry. I think we missed this one. We were probably, I think we were talking or something was going on and I missed this trade, or I think it was too close to the pivots. That's why I didn't take it. But, you know, if you have time, you can see here that it actually closes fine. But during the live session, it's probably moving too fast. And I was like, okay, I'm not going to take the trade, but this trade does end up hitting right there. I think we skipped that one there, but then I actually took this one right after. This is the one that we took, right? So there was 2 momentum scalp variations here. There was one right here. I took that one. There was another one right here. I didn't take this one, but then I did take this one right here. And this is the momentum scalp that actually played out and went to full TP. So yeah, those are the 2 trades that I took. I think I have 2 trades here on my, yeah, I do right here. So we had 2 trades that played out on Friday. That was the first one right there, momentum scalp variation. And then this was the momentum scalp. Or actually, I don't know, what did I take down too? Honestly, I can't remember, but I know we took 2 trades on Friday. But there was about 3 trades that came up. There's one momentum scalp variation right here, one more right there, and then one actual normal momentum scalp right here. So looking over at the momentum scalp, we already confirmed the trend, confirmed trading the direction of overall trend. Everything's bearish. Confirm momentum on the 10-minute. Sell signal right there. Confirm momentum on the 5-minute. Sell signal right there. Confirm momentum on the 1-minute. Sell signal right there. And then you enter on the close of the 1-minute momentum candle. So with this sell signal right here, that's where the entry came up. And then it pretty much just shot through and went straight to TP. So there was actually 3 entries that came up right here. I only took 2 of them. I think one of them we missed where it was too close. And then there's 2 that we actually took and hit TP. Yeah. Okay, perfect, Maria. Yeah, so Maria understands it now. Yeah, we'll set it. I think you took it, Sean, but your lot size was not correct if I remember. Yeah, I think that was the case. Well, because I just looked at my profits right here. That was my first trade, right? So I did take the other one too, but lot size was too small. It was like, I made like $1.92. I was supposed to make 1,920. But since I took a very small lot size, I took a very small profit on there. That was the first variation. I used the wrong lot size. And then I fixed my lot size. I took this one full TP, and then I took the last one right here for the momentum scalp variation or momentum scalp regular entry. So yeah, I did take all 3 entries, but not all of them gave me like the same profit. I think for this one here, wrong lot size. This one was perfect, straight to TP. And then this one right here, I think price is kind of bouncing around. So I just pulled out early because it hit TP, but didn't close me out. So that's why I just locked in partial profit off of this last one right here. So yeah, if you guys have any questions regarding these strategies, or if there's any ones that you took and they didn't hit, or you might have done something wrong, just let me know and we can cover them. That's what these mentoring sessions are all about. It's for me to just pretty much clear up any confusion and help you guys correct any mistakes that you guys might have made. So yeah, if there's any other questions, guys, let me know. Otherwise, we could look over more examples for the momentum scalp variation, momentum scalp, or we can also go over the breakout 2.0. It's just up to you guys, whatever you guys want to focus on. But those are going to be the main strategies that we're going to be applying during these live sessions. Let's see. Natasha said, you did say to wait for the pullback before you enter if the candle is too big, too large, right? Yeah. So something like that is when the, so like, for example, this candle here is not too big, but let me see if I can find one over here that was a little too large. I think we started getting a shift in trend like towards the end of the session, so I wasn't really trading anymore. But yeah, if the candle is too big, I was trying to find an example here. Let me measure this real quick. No, those are fine. So I'll find a big candle right here, and I'm just going to use it as an example. I'm not going to confirm that's an actual entry because for the most part, it's probably not going to be an entry. Because we didn't take any, I don't trade after 8. So none of these entries are going to be anything that I would have taken. There's a lot of entries here that did come up though. There's one right here. Another one right here. But yeah, what Natasha's referring to is my red flag. So basically my red flags here, when to avoid trades, basically whenever the candle prior to entry is too large. But if you really want to enter an entry, so like say you see an entry and it looks really good and you really want to take it real bad. But okay, so here's an example right here, actually. Let me see if this. All right, so this one right here is an example. It's not going to fit the criteria of like what I was trying to explain, but for something like this right here, because this is going to be an entry, but you can see how the candle is too big, right? Let me just replay this right here. So if I see a candle like this, Natasha, I typically would just skip it or I'd enter late. So like this right here, if I see something like this, whenever you see a candle that's big like this, typically what happens is price will retrace up to halfway past the candle. So like basically the middle mark right there, or it'll retrace to the entire candle. So typically what will happen is price will come here and then it'll come back down, or price might come up a little higher and then come back down or blast right through the stop loss, right? So that's why you don't want to take entries like this, because if the market's moving really slow and then all of a sudden we get this big candle, you'll typically get a retracement before price comes down. It doesn't happen here. It doesn't happen every time, but typically that's usually what happens. So for something like this, Natasha, if I saw something like this, I probably would just skip the entry because I'd be too uncertain, you know, as the direction of price, because especially trading this late, this is like 11 o'clock. It's like late in the session. So you can get a mid-market reversal at this time. So typically what will happen is if price retraces up, I'll just wait for it as long as it doesn't hit TP yet. If it retraces up, I'll wait. And then what I'll do is I'll place my sell stop right here. So that when price comes back down, like I got marked up right here, it'll automatically fill my order and then it'll go straight to my TP. But it doesn't happen right here. This thing just goes straight down from where it's currently at. I'll see if I can find another example here, but we're probably not going to find it on this specific day. Let's go back a little bit. So this one right here, no, that one's all right. Just looking for these candles here that are just a little too big. All right, so maybe this one right here. I know this was during London session, so it's not during regular. Okay, so this is actually a perfect example right here. Not an entry I would have taken because this is at midnight. I would have been asleep at this time. But this is one of the examples that I was just referring to. So see how you get a huge candle right here? Everything's kind of moving slow, right? You get these small candles, and then all of a sudden you get this huge 300 pip candle. When you get something like this, you typically want it to retrace up a little bit. So I'll let the candle retrace up a little bit right there. So see how price is way up here, Natasha? At this point, if I really want to enter this trade, so say I'm like fiending for this trade. I want to get into this trade. I think this is going to hit like for sure. What I'm going to do at this point is I'm not going to enter right away, but I'm going to let it retrace. And then when it retraces right there, I'm going to have a sell stop just waiting right here, right? So that's the type of order. If you're entering in the direction of the trade, you're going to put a sell stop right here, and then you have your TP stop loss set so that when price does come back down, see right here, it's coming down. When it finally comes down, it'll automatically fill your order. And then from that point, it goes straight to your TP at some point right there. So that's what happens when I enter late. I don't always do this because this is a risky way of trading. You know, at this point, you're kind of getting greedy, right? Because you're kind of like entering late, even though you already made the decision that you're not going to take a trade. So this is where I would make the entry, or even, I would even wait longer. If I wanted to wait even longer, I'd wait for this to kind of bounce around a bit. And then I see here it doesn't hit TP. Then at this point, then okay, I'm like, all right, price does come back down. It's probably going to hit because it already reached the halfway mark right here, right? Then the next level it's going to go to is going to be up here. So if it's reached that point, and I'm like, okay, price is having trouble getting past the halfway point, then odds of it coming down are very likely. So what I'll do is I'll just set my sell stop there, and then as soon as price comes down right there and fills, it goes straight to your TP. So this is how I would enter trades if I wanted to. But you guys know how I trade. I'm pretty risk averse, so I don't really get caught into this greed. If I miss a trade or if the trade isn't playing out the way I wanted to, I just let it be because I know there's going to be more trades that are going to happen. So I think that's the big thing that a lot of people need to work on this year as well, is really just letting trades go, right? If you miss the trade, then it's all good because you're going to have another one later, or you'll have another one the next day. So that is how you would enter. The way to identify if the candle is too large is just set up your TP stop loss next to it, Natasha. So like, for example, here. So say, for example, you see this candle here, and then you have your TP stop loss, right? The way to figure out if the candle is too big is if the candle is bigger than your stop loss, because if it has to retrace up, and I'll show you the actual movement here. So see how price kind of bounces around. I know it already hit TP at that point, but say if you were holding on to this and price wanted to retrace up, you know, all the way up here, you get really close to your stop loss, right? So you start to stress out. And that's not a position you really want to be in. I'd rather not be in this position and miss out on it rather than stressing out on a position like this. Because if you stress out too much on this, it's going to mess with your trade psychology and you're not going to want to take the next trade. So that's something that you want to, you know, obviously keep in mind. So, all right, cool. Yeah, if there's anything else that you guys need help with, you know, just let me know. You know, this year's a new year, guys. So if you guys haven't been able to find your groove with trading, I mean, this is your year to make that happen. So just keep in mind that this week's going to be a bit risky. It's a brand new year, brand new trading week, and it's NFP. So it's like a double whammy right there. But yeah, if there's anything else, guys, feel free to put it in the chat. Otherwise, we'll continue looking at the breakout 2.0 next. All right, so I'll just wait a little bit. If you guys have any questions, feel free to drop them in the chat. Otherwise, I'll move on to the breakout 2.0. I haven't taken it myself yet, guys. I've been looking at it, but I haven't taken it myself yet. I think this week might be a little risky because I mentioned, you know, NFP, new year, all that stuff. But I do plan on taking it at some point this year, at least when the market starts moving a little bit smoother. So, all right, we're done with this momentum scalp variation. If you guys want me to go over more examples, just let me know, guys. You guys don't be shy, right? Like if you guys have any questions, whether it's about trade psychology, any issues you guys are having, any confusion that you guys have, just drop your question. You know, you're not going to get any help until you guys ask the question. So if there's something that's really like hindering you from becoming a better trader, I'm here to help you guys out, but I can't help you until you guys ask questions because I pretty much ran through everything that I can think of. But you might have a problem that I haven't covered yet. So, all right, let's move on to the breakout 2.0. Going over here to the 10-minute. I'm going to go back to the prior week, not last week, but the week before, because we didn't have any entries last week. I think the last time we had an entry was on Friday of the week prior. So I'm just going to go back to Friday and I'm going to go to 6:30 on market open. So 6:30 right here. Just a candle prior to entry. So on the 23rd. $6:30. And then 23rd over here as well. $6 o'clock. All right. So looking over here at the breakout 2.0, let me go and put the requirements over here real quick. And then we'll go over the requirements one by one. So we're still testing this strategy, guys. It's not, well, I mean, it's going to be one that we're going to be applying, but I haven't taken one myself yet. So I'm not going to be taking it as an official entry. I'll be marking it up when I see it. But once we see a couple of them come up, then we'll determine whether we're going to start taking them as official trades. The main reason I don't want to take them as my official trades just yet is because I don't want to cut into my margin for the scalps during the live session, because these entries don't typically hit right away. So the last thing I want to do is take this trade and then be stuck in this trade while I'm looking for other entries to come up. I got to figure out the lot size for this. Remember the lot size, Manny? I think I wrote it down somewhere.
Or
For the breakout, for the 200K count, I think you said it was like a 30 lot or a 0.30. Yeah, I remember it was in the chat. 40, okay. So yeah, typically I'd be taking a 40 lot. So a 40 lot would be like $4 per pip times 1,500 pips. Actually, I think that's too high. Let me see, 33 times, or I think that was it if we were taking 1,000 pip, right? Yeah. Because I think that spreadsheet that we made was for like 500 pips, right? Or am I wrong? I might be wrong. Oh yeah, because this is for 1,000 pips. Because for the breakout 2.0, it's 1,500.
Oh,
Yeah, we'll just have to change it up a little bit, but it's not really, it's not a big deal. I'll try to figure it out tomorrow. I just want to make sure I'm risking about 3%, so I don't want to be risking too much. Yeah, I think 3,000 would be good. Actually, I just do the math right now. Let's see, 2 times. Okay, so it's 20 lot. I'll just send it to you so you have it documented. So that'll be the risk for 1,500 pip move. And then I think for the 1,000 pip move, oh, it's 30 lots. Same thing, just 10 more lots. 30 lots, $3 pip. All right. Yeah, so when I take this trade, guys, I'm going to be risking about, I don't know, how much is 3% of I'll be risking about 1.5%. Is that 1 point? I don't know. I can't get the numbers right. Is that is 3,000 divided by 200,000? Is that 1.5 or is that 1%?
3,000 is,
It's 1.5. Okay.
risk.
Yeah. So I'll be risking about 200K. So I'll be risking about 1.5%. It's gonna be the same risk that we take on the scalps. So if I make a win on that trade, then it's basically equivalent to like 3 scalps. And then if I lose a trade, it's equivalent to like 1 scalp. So I'll be playing around with it, but I'll try to figure out the probability of the trade. If it looks really good, then maybe I'll take it. If it doesn't look really good, I'll just skip it. So I don't know how the market will play out tomorrow. But anyways, looking over here at thanks Fernando for confirming that. For the breakout 2.0, first you want to confirm the trend on the 10-minute, 30-minute, and 1 hour. It's very similar to what we're doing for the momentum scalp. However, we're doing it on a bigger scale. So momentum scalp, typically we're looking at the our momentum scalp variation. Probably need to update the requirements here where it's broken down. So basically for the momentum scalp and momentum scalp variation, we're looking on the 1 minute, 5 minute, 10 minute. However, for the breakout 2.0, we're looking at the 10-minute, 30-minute, 1 hour. The reason why we're doing that is because we're looking for a bigger move. For these scalps, we're going for 100 pips. For the breakout 2.0, we're going for either 1,000 or 1,500 pips, depending on the current market range at the time. So looking at this right here, first step, you want to confirm the trend on the 10-minute. You can see here it's bearish. Price is below the pivots, trend meter is red, pivots are angling down. This is going to confirm a bearish downtrend on the 10-minute. Looking over here on the 30-minute, we have the same thing. Price is below the pivots, trend meter is blue. This is what I was referring to with you guys earlier. You don't have to have everything lined up. Like if you have everything, if you have a majority of things lined up, this will confirm that it's in a downtrend, right? So right here, we have a blue trend meter, meaning that price is shifting from a bullish trend to a bearish trend. However, if you were to measure this yourself, you can see here that price has been in a downtrend. This is why I don't rely on the trend meter alone. I use this in conjunction with the pivots because the pivots here show that price has been bearish pretty much since the day before. However, over here, it's looking like price was bullish if you just look at the trend meter. But this really is just a quick retracement and pullback before price corrected back down. So looking at this here, you can see prices below the pivots are angling down. Even though the trend meter here is blue, you can still confirm here that the trend is bearish. You won't really have much problem identifying this during the live session because I'll be identifying it for you. So what you can do is you can identify it and analyze it yourself and then just confirm with me during the live session if it aligns with your analysis. So with this right here, you can see that it's bearish. Next step, you want to look over at the 1 hour and you want to look for the same thing. So looking over here on the 1 hour, you can see that price is below the pivots. The trend meter is blue, just like it was on the 30-minute, but you can see that the pivots are angling down. So if you do the same thing here, the one way to confirm the trend manually is to just draw your own trend lines, right? Again, I'll be doing this myself manually, so you guys will be able to see me identify it. But you can see right here that this is obviously bearish, right? Because if you drew a bullish trend line, you can see here that it's not really bullish, right? The actual trend here, the smooth trend is actually bearish. Maybe short term was bullish here, temporarily is trying to switch to the upside, but it didn't actually confirm because price broke below it. So confirming that here, this would be probably considered an iffy trade though. I wouldn't be taking this one because this one here, you can see that it's not super clear, but it is somewhat bearish if you analyze it the way that I showed you guys. Look bearish to me, but you can see here that it's not super clear. So for this trade here, I probably would have just skipped it if I had the opportunity to take this on that day. So right here, we're just going to assume that everything here is bearish. We're going to go back to the 10-minute over here. Once you confirm step one, move on to step two, confirm direction of momentum. You just want to look back to the most recent momentum signal. We have a sell signal right here. So this is going to confirm the direction of momentum. We're looking for sells here, obviously. Trend is bearish. Momentum here is bearish. You're going to look for a sell. Next step, you're going to enter on the open candle in the direction of momentum. So this is the 620 candle. When this candle here closes, this is market open at 630. So you're going to enter a short position right there on open. TP stop loss is 1,500. Once you have that set up right there, and this is how you guys will determine whether you're using a 1,000 pip stop loss or a 1,000 pip range or a 1,500 pip range. If the candles here extend past the stop loss right here or your range, then obviously you're going to have enough movement to reach a 1,500 pip move. If the candles here are small and they don't reach where your stop loss and TP are, then volatility is low and you should probably use a smaller TP stop loss. But since here price is moving a lot pre-market, you're going to go for the bigger move. So with the bigger move right here, you have everything set up. You let the trade run, drops below, blast right through your TP right there. So yeah, this is pretty much the breakout 2.0 right there. So it's super simple. This is going to be basically the first strategy that we're going to be looking at during every live session pre-market. We'll be looking at the overall trend, looking at direction of momentum. If everything lines up, then I'll mark it up for you guys. And if you guys want to take it, feel free to take it. I'll tell you if I'm taking it or not. But I really got to weigh the pros and cons to see how risky the trade looks. This right here, I'd consider it kind of risky because obviously the trend here isn't very strong. But if you guys would have taken it there with the setup, you guys can see here that it plays out pretty nicely. So this is an example of the breakout 2.0. I can go back one more day. We'll look for another entry. So let's go back to Thursday, see if we have setup over here. Thursday, 6:30 a.m. There. Thursday, 6:30 a.m. All right, Thursday, 6:30. Sorry, Wednesday, not Thursday. I think I might have went back too far. Still Wednesday. All right, so again, right here, let's see if I can pull up Thursday. Thursday, 6:30. Thursday, 6:30. And then again, right here, Thursday, 6 o'clock, since the hourly. All right, so for this one right here, I would probably consider this an iffy one too. So looking over here at the trend, same thing that I was just showing you guys, this is probably going to be one that I would probably skip because it's not really clear as to the direction of price. You got to keep in mind that, this is the end of the year. So the market was pretty choppy and iffy this week. Let me see what trades we took that week. Yeah, so for week 4, we only took 3 trades that week. The market was super choppy, so we didn't really have many opportunities. That was probably the least trades we had during the entire month. So this one over here would be one that I would probably skip, just, like I was mentioning. Whenever you see something like this where it's not very clear, you can see here on the 10-minute, it's not very bearish because price was just shifting below. It was bullish right here and it shifted below. The trend meter here is still green and you can see that this can easily shift back up, right? So this here wouldn't even align for a bearish trend. So I wouldn't have even looked for a sell at that point. Looking here on the 30, you can see price looks a little better. It's moving this direction. Trend meter is red and the pivots are starting to shift. However, lining this up at the 1 minute, 1 hour here, it doesn't look like a good confirmation just yet. So the 30-minute and the 10-minute align, but the 1 hour does. So I wouldn't have taken this trade myself, but if you were to take the trade here, like say, for example, you still wanted to take it and you thought, okay, this will probably still play out. If you were to take a trade here, your entry would have been here for a sell because we still have a sell momentum. You enter the sell right there. Your TP stop loss, 1,500. You let this here run and it still hits TP. So you can see that there's different ways of applying the strategy. If you want to take it in a riskier way is to just not apply the trend. So if you just want to take every single breakout, then you would just ignore the trend, right? You just take off step one and you still take the trade in the direction of momentum. So the breakout 2.0 is kind of it's a hybrid to the daily entry and the regular breakout. That's why it's called a breakout 2.0, because this still confirms it's the same type of entry that you're taking for the breakout. Because we don't typically look for the trend, right? Or for the daily, we don't look for the trend. You just look for the first momentum signal. So this has traits from both of the strategies. It's basically the trend. It's basically the daily entry combined with the breakout. But it helps because you can take it on open and you can catch that big momentum swing on opening candle. So here's an example of one that I probably would, where I for sure wouldn't take it because it doesn't meet my criteria. But if you wanted to take the riskier way of applying it, then you can still take this for a sell if you wanted to. Not one that I'd recommend, but there's a lot of people in the group who like taking very risky trades. I don't recommend you guys do it unless you guys really know what you're doing. But you can't stop everyone from doing their own thing. So anyways, there's another entry right here. Let's see. So let me go to Wednesday. This is the day before. Wednesday, 6:30 right there. And I think this one might look a little better. Wednesday, 6:30. Wednesday again over here. 6:30. All right, so we're going to go over one more example here. And if you guys have any questions, feel free to put them in the chat. Otherwise, we'll see what else we need to cover because there's not really much to cover since we're focusing on just 3 main strategies right now. So if there's any strategies that you guys need help with, just, drop your questions in the chat. Otherwise, my main focus moving on this year is just going to be these 3 strategies: breakout 2.0, momentum scalp, and momentum scalp variation. That's pretty much going to be it. I want to keep it straightforward and simple so that whoever joins in at any point in time during this year, they know exactly what we're applying. All the live sessions are going to cover the same exact thing. So it's just a rinse and repeat of the same strategies every single day. My strategies work all year round, so they're not seasonal. You can pretty much apply them whenever you want or whenever you see them. So going back over here, if you guys remember the first step, confirm the overall trend, right? Overall trend here is bullish. You can see here on the 1 hour price is above the pivots, going up, trend meter is green, straight confirmation there. 30-minute over here, same thing, price above the pivots, trend meter green, pivots are angling up, straight confirmation there. Lastly, here on the 10, looking for the same thing, right? Price is above the pivots, the trend meter is green, and the pivots are angling up. So once you've confirmed all of that, you've already pretty much identified that we're in a strong bullish trend. So once you confirm the bullish trend, next, you want to confirm the direction of momentum. To do that, you want to look back at the most recent momentum signal. We have a buy signal right here. So we're obviously looking for buys. Trend is bullish, buy signal right here. We're anticipating price to continue up higher and higher from this point. So once you have that set up, you enter a long position right here. And then you're going to gauge the distance of price, right? If you do it at 1,000 pips, you can see here that this is a little too tight, right? Because if you go back to London session over here, price is like way down here. So the range is from way down here to up here. So I'm probably not going to go for 1,000 pips. I'd probably go for 1,500 pips. And then once you have that set up right there, or actually this might be a little far off. So we would have to play this by ear to see where price is at. I mean, personally, I think this might be because the range here is super far off. So where you want to measure the range is for more price retraces. So price comes up right here. And then this is the actual range that you're looking for. You're kind of looking between this low right here and the current high, right? You want to see where that movement's at. So I think 1,500 might be a little high for this specific move. So I might have just gone for 100 or 1,000. But then again, 1,000 is kind of too tight. So I probably would just go for the 1,500. now that I've seen it, this is where you weigh your pros and cons. You're like, okay, let me see where the range is currently at. Because the thing is, you just don't want to get caught in a position that's running for too long, especially for the breakout, because you want to get in and out of this position super quickly. So seeing this right here, I'm like, okay, this is a little too tight. I thought it was too big, but now that I'm looking at it from this angle, you can see the range is still far below here. So what I go for here, I just go for the quick or the full 1,500. Once you have that set up right there, you pretty much just let the trade run. And there you go, blast right through TP. So it wouldn't really matter here. I mean, if you did 1,000 pips, you still would have hit your TP. It's not like you would have gone stopped out. Or if you went for the 1,500 pips, you still would hit your TP either way. So either way, you're still doing a 1.5% risk. So you'd still be fine. You'd be within your parameters. So either way, so you can see here, it doesn't really matter. It doesn't matter too much, but it just depends on your risk appetite, right? If you're not feeling too risky, then go for the bigger move, have that wider range. If you're feeling risky and you don't want to hold on to the position for too long, then you just go with the smaller TP stop loss. So pretty simple. So all right, guys, if you guys have any other questions, feel free to put them in the chat. I don't really have anything else to cover today because I didn't really get any other questions. We pretty much covered Natasha's question and then a couple other questions that we had here. So if there's anything else that you guys want me to, delve into, feel free to let me know. But our main focus is going to be these three strategies: breakout 2.0. And this is just going to avoid people from being confused, right? So that you know exactly what we're applying. There's no confusion here. Like we're rinsing and repeating the same exact strategies every single day. I know that you guys see a lot of other people in the group apply other strategies, like you guys see people apply the variations. So you can see from my list over here, we have like the high-level momentum pivot scalp, high-level momentum strategy, reversal strategy, 1 minute breakout, high-low scalp, intraday momentum. I have a lot of strategies here. So if you'll see other people in the group applying these other strategies, you guys are welcome to apply whatever strategy you like. But during these live sessions, I'm only going to be focusing on these three main ones here. So momentum scalp variation, and the breakout 2.0. Where's my momentum scalp? Yeah, just these three strategies right here. So there should be no confusion because we're going to be applying the same thing every day. If you guys are new and you guys are still not comfortable with it, then just keep watching the live sessions. Take whatever trades I'm basically taking, because the trades that I'm taking, they're almost guaranteed to hit. Because I'm not taking anything risky. I'm taking anything that I know for sure is going to hit. So if you just want to win trades and build your confidence and build your ability to like identify and take these trades, then I would recommend to just focus on like what I'm doing, right? Do what I'm doing. And then once you're good enough to do your own thing, then you can apply the strategies on your own. But at the moment, just focus on these three main ones here. And if you're still not comfortable taking them on your own, just focus on what I'm specifically taking. Because if you just focus on what I'm taking during the live sessions, you guys should have like no problem getting funded, no problem staying funded, and no problem being consistent. Because the reason why a lot of people screw up is because they start to do their own thing. Like we'll trade from 6:30 to 8. People will lock in some good profit. And then I tell people, okay, I'm done for the day. But what happens? People get greedy and they want to keep trading all throughout the morning, right? If they keep trading throughout the morning, what happens is they start losing trades after the live session. And then now they dig themselves into a deep hole that they can't get themselves out of. So just something to keep in mind. So, all right, guys, if you guys have any more questions, feel free to put them in the chat. Otherwise, we'll be wrapping this up soon. I have another mentoring session with Oy, and it's scheduled for 4, but I'll be messaging him to see if he wants to have it early, because I'm going to be available from now until then. And we'll just be going over a one-on-one. Oy's like brand new to Kodi Kai or K2, so he's going to have some new questions, I'm assuming. And I'm going to answer them pretty much as I'd answer them as I would here too. So if you guys have any other questions, feel free to reach out. Otherwise, it looks like we're going to wrap this up for the day. Looks like a lot of you guys already left the room. So if not, I'll see you guys tomorrow for the next live session as we officially kick off the trading week. Otherwise, if you guys want to come back on the next mentoring session, just hop on. I'll post the YouTube link. Since it's a one-on-one, we're not going to have a Zoom link for everyone. It's just going to be the YouTube link for you guys. And I guess I'll catch you guys there. So, all right, guys, if you guys have any questions, feel free to reach out. Otherwise, I'll see you guys tomorrow morning for the next live session. Otherwise, I'll see you guys in the next couple of minutes to an hour for my one-on-one